Hey, it's Tom here and welcome back to the channel. So it's monthly Q&A video time yet again, and this is actually my second attempt filming this video. I did a full 25 or 30 minute video answering pretty much all of the questions, and turned out the audio was no good. So second attempt here, hopefully the audio behaves itself this time, and I guess I've had a bit of a practice run at some of these questions, so hopefully I can get some reasonable answers out in the video as well. So thanks to everyone who did ask a question. If you want to ask a question in a future Q&A video, just keep an eye on my community page here on YouTube. That's where I always ask for the questions, so that will be the place to go to keep an eye out for the next time I ask for a round of questions for a Q&A video. So with all that said, let's get straight into it, and I hope you enjoy. Okay, so first question here is from Armin. If I start shorting everything that I want to buy, will I start making money? Sometimes it can feel a little bit like that. I guess it's one of those things. If you employ like a value investing strategy, picking individual companies, particularly if you're quite concentrated and you don't own like a basket of 20 or 30 or 40 stocks or something, in the short term, things can go against you if you're right on that business, and the valuation in the long term should work out okay. So that's kind of my view on that one. Next question is from Jessica B. Where in the last quarter of the year, of the goals you had at the start of the year, which have you done best and worst at achieving? Yeah, so I did a goal setting video at the start of the year, and I did a goal sort of update video not all that long ago, so I don't have too many updates since making that video. I had kind of a few different goals in a few different kind of areas of my life. So I had a couple around YouTube. So I had a target to release a certain number of videos, and also to start a podcast and release a certain number of podcast episodes. So achieved both of those already, which is great. I had a reading goal. I haven't quite got there on that one yet, so I want to read 10 books for the year. I think I'm up to maybe 7, something like that, so should be able to tick that one off. I had a money saving goal, so that one I probably am a little bit behind on. Actually, it was a bit of a stretch target, and it was going to require me to make a little bit more income and save basically every cent of that after tax and so on to reach that target. So I'm a fraction behind that. If I have a really good next couple of months on YouTube or something, that might allow me to catch up, but it's not looking too great to kind of reach that number, but it's still a very big increase from last year. So I'm still pleased overall with where that's at, but I don't know if I'm exactly going to hit my initial kind of stretch target that I set. So that's that one. And then I think the only other one I had was a big one, which was buying a first home. So haven't been able to tick that one off yet. We're currently in lockdown again here in Hamilton, New Zealand, so it's a little bit tricky to get out and go to open homes and that sort of stuff, but buying a house is one of the biggest purchases, if not the biggest purchase that most people ever make, so taking our time with it, and I'm sure we'll get there eventually on that one. So thanks for your question. Next one is from Kalichi Waba. What was your most important takeaway from your interview with William Green, and when are you going to get Monish on the pod? I would love to have Monish on the podcast. Unfortunately, I haven't been able to secure him yet, but we'll keep trying. Hopefully we'll get there one day. The interview with William Green was great. Thank you for all the positive comments and stuff that I've gotten on that as well. That's been really cool to see. In terms of most impactful takeaway from the interview, and I guess / from William's book as well, I don't know if there's really one particular lesson that has stuck with me more than a lot of others, other than William saying, and sort of reading Monish say something along similar lines. Both of them just saying, if you can find one or maybe 2 ideas in that book that really resonate with you and that you think will make a real difference kind of in your life, whether it's personally or investing or whatever, take that idea and take it seriously, I guess, is the sort of Charlie Munger quote side of it. So I think a lot of people are guilty of reading about cloning or reading about, some idea that they think is quite powerful. It makes a lot of sense, but humans are fairly useless from time to time at actually implementing those things and taking those ideas and kind of running with them. So that's probably the main thing that I got from William, is that if something really did resonate with you in that book or in that interview, grab the bull by the horns and try and implement that idea in your life. So thank you for your question. Next one is from Mike Geo. Hypothetically speaking, if a crash were to cause your value stocks to decrease by 40 to 50%, And blue chips, Apple, Tesla, Microsoft, etc., to decrease by a similar amount. Do you stand by your conviction or change your investment strategy? Yeah, interesting question. So I guess I don't really view the world as value stocks and growth stocks and blue chip stocks. I think, they're all businesses and they're all going to hopefully produce cash flow, over time. And therefore, if you can understand the business and understand what those future cash flows are likely to be, then you can try to put a value on it. So, Microsoft and Apple and Tesla can be value stocks. They have cash flow that they produce over time. Hopefully those cash flows are going to continue to grow out into the future. And if you research the business and kind of understand the industry and growth drivers and so on, hopefully you can get a good feel for that. And then the name of the game really is just trying to identify the value of this wide array of businesses, or even just a handful of businesses that you understand, and to buy the ones that look most attractive in terms of their price relative to what you think their value is. So I guess my first inclination, if there was a big drop in the stock market, would probably be to add to businesses that I already understand and that I already think are maybe undervalued, because if I think they're undervalued and nothing fundamentally changes with the business and the price goes down a lot, then that is, a more attractive opportunity in my view. But of course, when there's big sort of broad market downturns, then potentially there's businesses that I don't own because I think they're too expensive that I will be able to buy. So it would probably be a mix of two in terms of adding to new positions and maybe buying some new ones as well. So thank you for your question on that one. Tim A, looking solid. Presumably that refers to the photo. Thank you. Patrick, what is your step-by-step process for doing a deep dive on an investment idea? Yeah, I guess I don't really have like a strict, 20-step process or anything like that. I have a sort of general framework, which has probably come from Phil Town's books, which is sort of this 4M checklist: meaning, moat, management, margin of safety. And I still use that today as kind of a rough framework. And then within that, it kind of depends on the business in terms of what I'm looking at. So investment ideas can come to me from maybe a 13F filing. I can see write-ups on, Twitter or Value Investors Club or, other places like that. There's a few different ways that businesses come on my radar and I get kind of interested in stuff. So the first thing is really just to try to understand maybe the original investment thesis, because that's generally the first thing I'm seeing when I'm getting exposed to these companies. And then it's really working through that checklist. So trying to understand the company. Does it have a competitive advantage? What's the management doing? How are they incentivized? How are they managing debt? How are they allocating capital more generally? And then what's the valuation look like? So with each individual business, each of those steps can be somewhat variable, but that's the general process, I guess I would say. So thanks for your question. Next one is from After Dinner Investor. Do you think it's possible for lots of us out here with decent intelligence and the right temperament to beat the market consistently over long periods of time? Or do you think there's only like a handful of people on earth who can do this? Yeah, I am certainly of the belief that individual investors can have great performance over the long term, potentially over and above an S&P 500 index or whatever your index of choice is. I think a lot of individual investors have some very key advantages over professional investors. We're able to concentrate in kind of a handful of stocks. We don't have to be fully invested all the time. We can sit with some cash on the sidelines if we want to. We don't have to worry about, worried investors like calling us, panicking when prices are going down. We can view those as opportunities, and we can, sit on the same basket of stocks for years and years and years if we want to. We don't have this institutional imperative of people saying, what have you done for me lately, and what have you done in the last quarter, and why are you down in the last quarter, and all that sort of stuff. We can focus on basically being owners of businesses over the long term, and I think that's a really key advantage. So yes, I think it's possible. The only bit I would maybe adjust to your question, or kind of what you've implied here around beating the market consistently over a long period of time, I would probably remove the consistency part. That's one thing that I don't think is probably possible for most people. Maybe it depends how you define consistency, but I don't think you're going to beat the index or whatever your chosen benchmark is year after year after year after year after year, just because you've got decent intelligence and temperament. If you run a fairly concentrated portfolio like I do, you're going to have fairly volatile results year to year. So I don't know that you can necessarily do it consistently. I don't really like when people suggest that maybe you can. But if you mean consistently, as in, maybe like 5 or 10 year blocks back to back to back, then I think that's possible. But, every week or month or year, I don't think that's doable at all. I mean, Bill Miller, for example, beat the index for 15 years straight, and that's kind of like an unheard of, record. There's very, very few people who have done that like back to back to back for that period of time on an annual basis. So thanks for your question, Afternoon Investor. Next one is from Just One. Do you have any new possible investments on your radar? I would say that more recently I've spent most of my time just trying to understand businesses that I already own. So there's not a lot of new stuff that's kind of on my radar right now. The only one that really springs to mind would be ASOS. So that's a Nick Sleep investment from a couple of years ago. The price is getting down to, probably somewhat close to where he bought it, maybe in 2020, in sort of March 2020. Still not all the way there, but it's kind of coming back to earth a little bit. So that's kind of interesting. I have a video on the channel on ASOS with some of my initial impressions on the business, but there's more work for me to do on that one, and I haven't added to the investment just yet. But I'm trying to understand existing businesses in my portfolio better and better over time, and trying to be a good long-term owner of those companies as well. So that also does take up a little bit of time. So appreciate your question. Next one is from Michael Rowland. All the prices the super investors bought into Baba recently were available in 2020 and 2019. Are we meant to think that they all hadn't done their research yet at that point? What do you think changed in Baba for Charlie to start buying in at 220 when he could have bought lower before Q1 2021? It's an interesting question. I will put maybe a stock chart of Alibaba up here because I don't know off the top of my head exactly what prices look like in sort of 2018, 2019, 2020, but I think right now we're getting down very close to like IPO level prices in like 2017. So it has come down a lot. It's maybe not quite all the way down to where it IPO'd, but we're really not all that far away at this point. And I'm sure that a lot of these investors knew about Alibaba and understood it well a couple of years ago. The thing is, Alibaba's growing so fast. Like, it's got a 10-year compound annual growth rate across revenues and earnings and cash flows and so on of like 50% a year. So, even a 2 or 3 year time frame, the intrinsic value of Alibaba has actually grown a lot. So if the market price has gone down or sideways and the intrinsic value and the size of the business has gone up, that inherently makes the investment more attractive. So I think that is largely the reason. Obviously, Charlie Munger has had an investment in Li Lu's Himalaya Capital for a long period of time, so I'm sure they talk to each other extensively about businesses like Alibaba. Li Lu was telling us that he was having dinner with Charlie Munger once a week for like 15 years or something at his last interview. So I'm sure they talk about that stuff, and I'm sure he's understood the business for a while, but I think it's kind of just recently got really attractive from Charlie's perspective, so he's chosen to swing. So maybe it would have made sense for them if they looked at it a year or 2 years ago, but I think they've maybe just got over the line with recent prices perhaps. So that's my view on that whole thing. So thank you, Michael. Next question is from Henry Michael. Hi Tom, what are your thoughts on IPOs? I often get emails from a site I regularly follow with opportunities. I have resisted but not dismissed entirely. Cheers, mate. I think that's probably a pretty good way to go, is to resist but not dismiss entirely. I mean, there's clearly great investments that if you bought them at IPO, they're phenomenal companies and they've done so well that they would have been great investments. But I don't know if that's the majority. I haven't seen statistics on that per se, but IPOs are set up to raise capital and sell a portion of the business. So when you do that and you have a team of investment bankers and so on trying to, hype you up and hype up the stock and sell, the future of the business and so on, generally speaking, people are trying to raise as much money as possible by selling as little a percentage of the business as possible. So that does not really lend itself to attractive investment opportunities. Nonetheless, there's pretty famous examples, so things like Google. I know Bill Miller and Phil Town went into Google basically around the IPO. I think in the case of Bill Miller, maybe only 1 or 2 years after IPO in the case of Phil Town. So from time to time, you can have profitable businesses where the valuation actually does make sense and kind of go public. But I do think they are the vast kind of minority of businesses. So that's sort of my view on that. I've never bought an IPO. Buffett, after like 70 years of something of investing, has also never bought an IPO either, which is pretty fascinating. So thanks for your question. Second one from Henry Michael, lamb or steak? I like both, but if I had to choose, I'm going steak. So thanks for your question. Next one is from the Adventurous Investor. Full beast mode, that looks tough going, mate. How long were you holding that pose for? Are you doing Movember this year? If so, are you keen to get a team together? Right, okay, so let's take the first question first. So that pose, or the photo I put up, so that was from Waikato Strongest Man, local strongman competition here in like February or March last year, I think it was. I was hoping to do that same competition again this year, but it got postponed and then eventually cancelled with, with COVID and all the stuff kind of related to that. So unfortunately, I haven't been able to compete in Strongman this year. But yeah, I wasn't holding that pose very long. So that event's called the Hercules hold. I'll put maybe a video or a photo showing kind of the full event here, but you've got basically these like pillars with chains and handles coming off each one. You just it's basically just a grip test. It takes a little bit to, when the weight first comes on, to kind of get your balance, but then it's really just trying to hold the weight as long as possible in your hands. At that particular competition, I think they might have kind of just been too aggressive with the weights, to be honest. So in the under 90 kilo body weight category, I think the winning time was like a minute and a half, something like that. And then when they went up to my category, which is the under 105 kilo class, they added weight to the pillars. So they put these like extensions on top of the kind of poles to make it a bit heavier from memory. And I think the winning time was like 12 or 15 seconds. So it really brought everyone down a lot, even though, upper weight class, the weight was, brought people's times down. So I think I literally held that for like 3 seconds, like long enough to take a photo, and that actually placed me surprisingly high. I think I got like 3rd or 4th in that event, and that was probably my best event of the day, because everyone was just kind of struggling to get their initial balance when the weight first came on, and they were kind of dumping it. So yeah, that was interesting. If you look really closely at that photo, actually, I'm actually using something called a hook grip. So as opposed to like a regular overhand grip like that, and you actually put your thumb under and hold like your 2 fingers over your thumb, which is quite a painful grip. It comes from Olympic weightlifting, but it's very strong. So that probably gave me an extra second or so as well, I would guess, but hopefully I'll do better in that one next time. In terms of Movember, I said this when I filmed the video the first time around, but I think you've convinced me to go ahead and do it again this year. So yes, happy to do Movember. Yes, keen to get a team together. So if there's any finance YouTubers out there that want to join myself and Neil, the Adventurous Investor, on Movember this year, definitely let me know, and we can get a team together. I think last year we raised about $2,000, which was fantastic. So it would be great to have another crack at doing that again this year. Okay, next question is from SD358. Have you looked at GreenFirst? I like the bet. Am long, pretty stoked. Mike Mitchell joined the board. Yeah, so I follow Mike Mitchell as well on Twitter. I think he's at Ignore Narrative, if anyone doesn't already follow Mike. And GreenFirst is interesting. I know that was had just gone parabolic in terms of the price for a while there, and it's come back a bit. I don't know if that's just the price coming down or whether they've returned a lot of capital to shareholders. I have a feeling they issued some warrants or something like that, which I don't quite understand the exact situation that happened there. But I'm not invested in GreenFirst. I mean, Mike Mitchell is a very smart guy, and I'd be pretty stoked he's on the board if I was invested in it as well. But I guess what you're buying is a lumber mill, so it is kind of a commodity play, and a lot of commodity stocks look quite cheap at the moment because commodity prices are very high. So on, price to earnings ratio or something, they can look very attractive. I guess the thing you have to try and understand is what commodity prices might look like 2 or 3 years out, which is basically impossible to predict. But if you ran like a worst case scenario on commodity prices, I'd be keen to understand what the earnings would look like for that particular asset as well. So I haven't looked at it particularly closely, but those, I guess, are some initial thoughts and some things I'd kind of be paying attention to. So Thanks for your question, SC. Next one is from Mike Sharp. What is your crash/extended stock market decline plan? Do you keep cash on hand or have stops, or are you at 100% invested, just going to write it out? Yeah, so I have a couple of videos on cash on the channel. I basically just clone Monish Prabrai's framework on that. He hasn't spoken about that for some time, but I suspect he's closer to fully invested right now, just the way he's been talking about a few things. But yeah, I guess I have a few different thresholds at which I will invest more and more of my cash. And right now I'm pretty close to fully invested. I'm maybe 10% cash or something like that. But at the same time, my annual savings are still a reasonable chunk of my portfolio. So that cash position kind of builds back up naturally again over time. And in terms of a crash or extended stock market decline plan, I mean, that's like the perfect scenario for me. It's kind of an unusual thing probably to hear people say, but you know, if I were to be trying to buy up every house on my street or something, you know, ideally I would want the prices to be lower. And it's the same thing when I'm trying to buy good businesses that trade publicly. If the prices come down and we have like a 1973-74 bear market, or 1987, or 2000 to 2002, or 2008, 2009. These are all like historically good buying opportunities that have, you know, if you could be kind of courageous, I guess, and buy fear through those times, then those have been spectacular times to buy into the stock market and buy into great businesses, and you've had, you know, very good returns kind of moving forward as a result. So if there was a long period of time, like, I don't know, 5 years or more, where I was just able to consistently buy stocks at super attractive prices, then that's a great way to build kind of long-term wealth in my view. So yeah, bring it on. That's kind of how I view that. But thanks for your question. So next one is from Tom. Great name. Thoughts on Facebook stock after the recent outage and regulatory news? We talked about Facebook stock actually quite extensively on the Punch Card Investing channel just in the last stream, so I'd recommend going and checking that one out after you've watched this video, of course. But yeah, I don't think anything's fundamentally changed from Facebook after some outages. I've just straight up missed Facebook last year. It did get to sort of my 50% off margin of safety price in the, you know, March 2020 or April 2020 kind of drop. But it happened so quickly and it was at that price so briefly that I just straight up missed it. So that was a mistake on my part. But Facebook's one of the best businesses in the world, you know, in terms of like the margins they can generate and the cash that thing just throws off. It's crazy how much cash that thing produces. I guess you have to ask yourself the hard questions on whether you think that will continue 5 or 10 or 15 or 20 years from now, which is a pretty hard one to answer, I think, for Facebook. But, you know, a lot of people have got across the line with that, and it's clearly done very well. So thanks for your question. Next one is from CBTO Money. What advice do you have for a small channel like mine? Yeah, so in terms of growing on YouTube, for me, basically all I've really done is just try to come up with video topics that I would be interested in personally, because that's stuff that's easy for me to talk about and easy for me to make content on, and then just put that out consistently and, you know, take on good feedback when it comes in, consider the poor feedback when it comes in from time to time as well, and just be very consistent with it. And a lot like you're investing and, you know, the compounding of a portfolio, a YouTube channel is going to be very similar. So in my experience, it took me 6 months to 100 subscribers. I have like a 100 subscriber thank you video on the channel if you want to go check that out. I think it was another 6 months after that to 1,000 subscribers. I think another 2 months after that to meet the watch time threshold for monetization as well. So we're like 14 months in, I haven't made a cent off YouTube. And then I think probably 6 or 8 months after that, I was at 10,000 subscribers, and it kind of just keeps doubling. I think in the last year, we've probably doubled the channel as well. So it's just consistently putting content out. At the beginning, it was 1 to 2 videos a week. Then it went to 2 videos a week pretty consistently, and now it's closer to probably 3 videos a week. So yeah, I think if you can stick at that long enough, then you'll kind of do well and compound the channel over time. So hopefully that's useful. Next question is from Angelina. Do you have a checklist to determine whether a stock is good or not? If so, what is it? Yeah, so I have been working on a checklist recently. I wonder if I should maybe even make that a video on the channel going through that checklist. I sort of take the Monash Pariah view that checklists are kind of personal, so I'm happy to share it, but really there are things that I would miss that probably you wouldn't. They're things you just naturally think about, but I need to stop myself and look at the checklist and make sure I'm not missing it. And there's probably things the other way around. So there's things that I would naturally think about that you might, miss more easily. So I think checklists do have to be kind of personalized in that way. But they're really not things on the checklist that would necessarily make the investment more attractive to me. I'm really just have kind of a checklist of all these red flags, and I'm making sure that I've checked whether or not those red flags exist with a particular business, so that I, don't make the same dumb error that either I've made or someone else, has made before in an investment. I don't want to be caught up making dumb mistakes just because I've missed something obvious. So that is really more what the checklist is about. But if you're interested in me sharing that, definitely let me know. So thanks for your question there. We've got a few questions here, but I'll to the effect of what are your thoughts on the Indian stock market? So I'll take the one from Arjun. I would say I don't have any particularly, insightful things to say about the Indian stock market. I basically view all sort of stock markets the same. So New Zealand, Australia, the US, China, anywhere around the world really. I'm fairly open to investing in those places for the most part. It really comes down to the individual companies, the economics of that company, and then the price at which I can buy into that particular company. So, if there were an individual business in India and I can get access to it through my brokers, and it's a good business at a reasonable price, I would be certainly open to buying that. But I don't do a huge amount of investing in like just broad market indexes, so I haven't really had to decide whether to allocate to particular parts of the world or anything like that before. So that's kind of where I stand on that. So thanks for your question. Next one we have here is from Henry, which is how much work have you put into learning about the management team at Alibaba? So this is probably one of my weaker areas with Alibaba, I would say. It's an area I want to do more work on. I know some of the people sort of in the C-suite, so Daniel Zhang being the CEO, and I believe it's Maggie Wu as the CFO. They've both spoken on investor calls and at investor kind of presentation days and that sort of stuff. So I've watched some of those things back. I've also looked a little bit into their ownership. So both of those people have a lot of money in Alibaba stock. As far as I know, most of that I think has come through options, but I could be wrong on that. They may have bought it personally, but that's something I'd probably have to do more work on. In terms of Alibaba management kind of performance, so I guess you can look at things like debt levels. You can look at the capital allocation more generally with share buybacks and what they're doing around that at the moment. And then in terms of trying to understand the actual people, I guess Alibaba has so many subsidiaries and there's so many businesses within Alibaba and so many different people across each of those businesses that I don't think you're ever going to be able to get to the level of understanding of, knowing all the people at all the subsidiaries and, what their backgrounds are and how they're running the business and how they view the world and so on. It'd be maybe a little like going to Berkshire Hathaway and trying to understand the manager of See's Candy and Berkshire Energy and all the insurance businesses, and a few of them, but it's kind of hard to get there on everyone. But I think we can maybe understand from a high level, how the management at Alibaba is thinking about running the business. So something I probably need to do more work on, but that's kind of where I'm at with it at the moment. So thanks for your question, Henry. And final question is from MM. Which companies in your watch list? So I have a watch list of maybe 10, 15 companies that I know reasonably well. There's a bit of a longer list outside of that I maybe know less well, but I think I could get there on them pretty quickly if the price was to do anything too crazy. I don't think there's a lot of companies on there that would be like surprising to hear. A lot of them are very well known, so a lot of them are the no-brainer businesses like the Apples, Googles, Amazon, Facebook. I guess less well-known ones, so Domino's Pizza Enterprises on the ASX. I actually used to be a shareholder back in the day of that. A mistake to sell in hindsight, but that's one. New Zealand King salmon here in New Zealand I think is interesting, but again, one I probably need to refresh myself on to keep looking into. Frank Tabor on YouTube, his beloved Kelly Partners is one I've done a bit of work on recently, but haven't quite been able to get there on price. So that's Kelly Partners Group on the ASX. What else have I got in there? I guess ASOS, Alibaba, Costco, Berkshire. Hopefully that gives you a few kind of names initially that I'm kind of looking at, but there's nothing particularly, I guess, mind-blowing on there that are businesses that other people wouldn't already be following. So thanks for your question, and that is the last question we have. So thank you to everyone who did ask one. If you did enjoy the video, please hit like and hit subscribe. Like I said at the beginning of the video, if you want to ask a question in a future Q&A, just keep an eye out on the community page here on YouTube, and you'll see my post that I put up asking for questions probably about a month from today. So appreciate you hanging on and watching the video to the end here if you've got to this part. But that's it from me for this one, and I'll see you in the next video. Cheers.